think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today we are joined with Joe Cavatoni of the World Gold Council. Share with us, what is the World Gold Council for those who may not know what it is?
It's a member organization. We're global in nature. We're made up of members that are the world's largest gold mining companies. And our focus is to promote gold, educate on gold, remove impediments for demand, and really just bring people the opportunity to understand, trust, transact, and own gold in a world where they can actually make it part of their lives.
Mm-hmm. So when you look at like representation of nations and such, like about what is the diversity of nations in the Gold Council?
Our membership is global in nature, and we've got representation from all over the globe, including Australia, China, Canada, and the US.
Mm-hmm. That's good. That's good. Yeah, it's always good to because you're able to get different perspectives from different places in the world and what the mining industry looks like there.
Absolutely.
Or what's happening with gold in different nations. Because right now we have China, you have the People's Bank of China that was buying a lot of gold. You had central banks buying gold over in the East. And so what trends are you seeing there in terms of gold being back in favor for many countries?
So our organization produces a quarterly gold demand trends report, and I'd encourage your listeners to take a look at that every quarter, because what we do is we break down the types of demand from location, but also the type of consumer that's actually active in the market. And you're right to point out central banks as a trend we've seen for 14 years, but a record-setting trend for the last 2.5 years. And we've seen just emerging market central banks taking advantage of opportunities to add gold to their reserve portfolios. But another really interesting dynamic that we've seen on a global scale is that the investor community in the Western markets have been on and off in terms of bar and coin demand. So it's been somewhat cyclical. But I'd also say that investors at the institutional level and using financial instruments have been rather quiet. Where it's been really exciting has been watching the Eastern investor, China, Asia Pacific, India. Those investors are adding gold and have been really active to bring it into their portfolio diversification. It's a market that's more sophisticated these days. You have instruments available to people and also physical gold that's available for people to purchase and add to their portfolio. So we've really seen this shift to the Asian markets, the Eastern investor, who's really kind of controlling the price of gold right now. That was central banks. Again, on the Western markets, a bit quiet. But we'll see what plays out over the second half of the year, particularly from a rate environment that might bring Western investors back to the market.
So is this a normal trend with it happening in the East first, based off previous cycles of gold? I don't know if in the early 2000s it started in the East first, and then the West started getting on board, or even the 70s. Do you all have data or information that kind of tracks where it starts usually?
Sure. We have data that goes back over 30 years in terms of the demand trends. We just celebrated last year our 30-year anniversary of the World Council's Gold Demand Trends report. But it's actually a good question, because this is actually a rather unique time in the gold market. This is a market where most people have expected the rate market in the US and real rates and the strength or weakness of the dollar to be the driving force of gold. But we've been very clear to make sure everyone understands gold's global. And this has actually been a real good demonstration of a very significant impact that Eastern investors and central banks can have as a source of demand on the price of gold. So it's actually been kind of unique for us. So we've seen demand up, and it's really been driven by that. And the impact we would expect from the rate environment to actually be putting downward pressure has held gold back, but it hasn't pushed the price down, which we might have seen in the past. I think back in the early 2000s and in 2011, 12, we would have seen a similar environment, and that had a much more negative impact on the price of gold.
So gold is often mostly viewed as safe haven asset. So some of the risks that I've heard to gold would be if there's a peace and whether that's in Israel, Hamas, or even Russia, Ukraine, like that could be negative for gold. And obviously, like the geopolitical tensions are pretty high right now. And so, do you see what's your outlook on gold, considering those factors, geopolitical risks and tensions across the world?
That's a great question. And I agree with you. Everyone has the understanding that gold will protect you when markets are risky and uncertain. That's something that everybody really well understands. What I think people are better understanding today is that during economic expansion, gold performs well in addition to when it performs well during market risk and uncertainty. So those are the strategic drivers. And actually, we try and make sure everybody gets that picture clearly. So gold correlates well with risk assets during good market times. And I think that what we're seeing today is a lack of clarity over both directions. So the unknown unknowns that we often face with kind of conflicts that flare up keep gold relevant and in people's portfolios. But right now, it's hard for people to see a clear economic direction for the markets like in the West, like the US, for example. So they're sitting tight right now. So we're actually looking at this stage of range-bound gold prices for now. And our outlook is actually talking about a catalyst. One big catalyst that will likely develop will be a rate cut in the US, which will actually start to develop more of a landing, so to speak, in the US economy. And we'll start to see Western investors come back to the market. So to your question, we're a bit range bound right now. I'd say that people are hanging on to gold for sure for that risk protection, but they'll wait to see how the economy develops and the outlook for the market develops before adding new allocations to gold.
And so when you have the physical buying, so some of my audience, they're more like the physical buyers of gold and silver, versus like the mining companies. We've still been seeing some struggles there. Is there any outlook that you all have for miners versus physical gold? Does the World Gold Council mostly focus on like tracking physical gold buying? How does that look?
That's where we spend our energies. We talk about the precious metal itself. And look, there are many options for people to express the investment interest in the metal itself, whether it's through financial instruments or in the physical form or through derivatives or pooled accounts, etc. So there's lots that you can do in that space. When it comes to the mining companies, they are definitely very interesting investments. What we'd encourage people to do is to say, understand the price of gold, how it impacts the performance of a mining company against their all-in sustainable cost levels. But in addition, make sure you understand the dynamics of the company, because you have a management team, you have a financial balance sheet, you have the inner workings of a company that are linked as well to the investment that you're making. So a different investment, but definitely one impacted by the price of gold.
Yeah, for sure. And so does the World Gold Council, I'm sure it only focuses on gold, right? Because like there are a lot of silver bugs out there that wants to see silver go higher, and whether central banks will start buying silver at some point. I don't know if that's even a discussion that even comes up at the World Gold Council.
We get asked a lot of questions around precious metals, and to be honest with you, our energy is focused on gold. It's the large precious metal that actually plays a role not only in technology but also in the financial markets in a very mainstream way. But it is interesting about precious metals, particularly gold, silver, platinum, and palladium. And often when we do work on the policy side, we might work with those other metals groups to help them bring them along as we work on policy. There's an example of that we're working on in the US, trying to open the door for precious metals to be consumed by 40 Act funds, mutual funds, which are somewhat constrained around what they can do with commodities. We have an open bill right now in Washington, and it's actually focused on precious metals as a defined category. So there's where we can see benefits of opening the door for investors for all four precious metals. But our energy around research, data, and insights is focused on gold.
Yeah, that makes sense. So in recent years, gold was classified, I believe, as a tier 1 asset, classified as a tier 1 asset. What did that do for just the nature of gold, or just like even for people that, want to hold this asset as either protection, insurance, or even investment? Like, being categorized as that? Like, what benefit does that have?
Well, I think it just continues to remove any impediments or remove any question over whether gold should be considered an investment that's comfortable, liquid, and actually easily consumed and treated appropriately in the investment context. You know, it's interesting. While there are good things that are happening for gold in that context, there are still other areas around the globe. For example, the capital requirements that a commercial bank might have to hold it in their trading portfolio, still very high. We're working on an initiative to remove that barrier so we can bring more trading companies back to the table and continue to grow that pool of people who are active in the market, adding liquidity and acting as a source of access for people to the market. So removing any of these impediments just makes it even more mainstream than it already is.
Mm-hmm. So I recently watched the documentary movie with Idris Elba, and it was amazing. So it's free. I'll link to it on YouTube if you all haven't seen it yet. And the World Gold Council helped put that together.
That's right.
So in the documentary, it showed the impacts of gold on the environment, and also or not gold itself, but the mining processes. And right now we do have more ESG involvement in terms of how to do this sustainably and responsibly. So what is the World Gold Council's kind of involvement or outlook on increasing responsible usage and practices?
It's a great question. It's an excellent example. While the entertainment factor is really very high with the video and the film, which I see it and I watch it regularly. I love it. It's a beautiful film, done really well. There's a lot in there in terms of the messaging around what's important for people to understand about the market. And that's the entire idea behind it, is to say, let's bring interesting, well put together pieces to educate people. Mm-hmm. So we've worked with our mining members to actually grab the bull by the horns, lead from the front, set out our responsible gold mining principles. We're working with other organizations in the industry to harmonize and consolidate those principles that we apply to our members, so that we can get a better landscape for members and gold mining companies and all mining companies to adhere to better standards. So whether it's ESG, whether it's buying behaviors with retail investors, whether it's something along the lines of understanding the artisanal space or working with central banks to aid in actually bringing artisanal mining into the mainstream, all of these types of initiatives are things that we fund and we lead with our members in mind, and actually we bring the industry together and actually deliver the goods. So we basically are trying to improve the industry and remove these barriers or even some of these problems. Mm-hmm. And it sometimes is done well through a video, like we did with Idris, or in other instances, it might be just being very open and honest with research and data and insights that come from reports. We've just sanctioned a report with Dominic Raab, former Deputy Prime Minister in the UK, to unpack a lot of information around the artisanal mining space and really put a spotlight on it and say what needs to happen here to make this better and make this better understood, and then work with governments around the globe to deal with it. And that's the kind of work we do.
Yeah, that's good. That's good. So you're doing a lot more outreach efforts and raising awareness about gold and its role and everything. So what are some other ways that you all are doing outreach?
Well, I think the other things that we're doing around market structure involve our work to think about digitalization of gold, or the digitization of gold. Mm-hmm. And really what we're looking there to achieve is a better platform for how digital technologies and blockchain technologies can help the industry, not just give us another token that gives us access to gold. There's a lot of those that have been issued, and some of them have been interesting, but they really haven't changed the market. Mm-hmm. And what we really want to do is work with technology through tracking and tracing of gold, and using that as a better platform to then use downstream technologies to give people easier access. Mm-hmm. That's a big item for us. It's called gold bar integrity, and actually under the veil of what we also refer to as Gold 247. And that's really bringing more participants, better technology, faster information, really changing the industry, and then using technology to make it easier to access.
That's good. Well, looking forward to the developments there. So where can people find more information about the work you all are doing, the
Sure.
reports? And
So you can start with gold.org, our website, and inside there you can find Gold Hub, which is where we have our data and our insights and our research. I encourage everybody to check it out and subscribe to our reports.
All right, be sure to check that out. I'll link to that in the description below. Thank you all for watching, and thank you, Joe, for coming on.
Thank you.
Cheers.